The stock which is on our radar is Castrol. Ravi Kirpalani, the MD of the company, now joins in. Afternoon, sir. Thanks so much for joining in. The very significant decline in crude prices will benefit the company. In Q1, your margins, sir, were about 21.9%. Now, as the full impact of the crude price decline kicks in, how much could your margins rise from the current 22%? Can they hit the 25% mark in the next 2 to 3 quarters?
Well, firstly, good afternoon. Thank you for having us on this show. A couple of sort of words of context. It is true that crude's come off very sharply. And as you mentioned, from the June highs, we've seen Brent now traded about $60 or $62 a barrel, which is a substantive decrease from the price over the last few months. Now, our cost of goods is based on the cost of base oil, which is a derivative of crude, and normally over the longer term tends to follow the same direction as crude. However, in short terms, it doesn't exactly lead to a one-to-one correlation. And what we've seen is that the drop that's been announced in base oil prices so far have not been anywhere as sharp as we've seen in the price of crude. Our expectation, though, is that if the crude remains at these levels and if the rupee remains stable, then we should see a similar drop in base oil prices over an extended period, maybe the next 2 to 3 quarters, reflect in the price of base oil as well.
Okay. So as things stand right now, what has been the decline in base oil prices?
So this is a changing situation that's happening sort of literally on a day basis. But let's say if we are saying the price from the highs of $115 a barrel in June, if they've come off by 40%, then currently the decline in base oil has been about half of that.
Hi, Mr. Kirpalani. Thanks very much for speaking with us. If and when you do see the benefit of lower prices of base oil, would you look to pass any of it on to your consumers?
So that's correct. And what I think happens if you go back and take a look at historical trends when crudes come off sharply, I think you see a mix of both. Some of this will get passed on to consumers because we want to remain competitive in the market, and therefore is a function of our competitive position in the market, what competition does. But I think, as you mentioned, our margins have come off. In the last couple of years, we've seen a completely unexpected increase in the price of raw materials, and that's resulted in a lower sort of margin. So we will be seeing to utilize this drop in prices both to restore our margins to normal levels, but also to pass on some of it to our consumers.
Okay, so what would be the normal levels of margins for your company?
So if you go back and take a look at historically, we've probably shaved off 2 to 3 percentage points in operating margin, simply because if I can give you a size and scale over the last 3 years, and if you benchmark it back to 2010, just the increase in cost of goods has been over 700 crores for this company. And clearly we've not been able to pass on that massive increase in the cost of goods. As a result, our margins, our operating margins, as I said, have come off by a couple of percentage points. So we will be seeking to see how we can restore our margins as well.
So up to the September end quarter, you were dealing with higher prices of base oil. There was also the unfavorable forex impact that you were seeing on your earnings. Going forward now, with the likelihood that base prices could come off, how are you going to be impacted by the recent depreciation that we've seen in the rupee?
So that's a good point. Firstly, to put the first part of your question to perspective, as you rightly said, in the first 9 months, the adverse impact just in year of the first 9 months of foreign exchange and the base oil situation has impacted the financials of Castrol India by over 150 crores adversely. So that's the reality in the first 9 months. Now, clearly, the real advantage to us is in terms of landed price of base oil, which is a function of what happens to the dollar price, which we expect, as I said, will follow crude with a lag. But the other is the exchange rate, and I think we have seen more recently the rupee continue to remain volatile, and in the last few days we've seen it trading at a rate lower than it was. So we are watching this very carefully, but clearly the net benefit to us will be an impact, not just what happens to the dollar price of base oil, but its landed cost in India.
Has the company or the industry cut the prices to pass on the benefit of declining raw material prices?
So we've been watching competitive reaction closely, and to the best of my knowledge as I speak to you today, I haven't seen any reduction by any competition on their prices.
Okay, so the bulk of your revenues come from the automotive segment, and within that, I guess primarily you focus on the CV space. Can you tell us what kind of improvement you are seeing in the CV space, or what you're hoping for in the next 1 year?
It's interesting you ask the question. In fact, the market's changing quite rapidly, and it's true that historically a large part of our volumes and profits has come from what you call the CVO space, which is really the oils we sell to trucks, tractors, and to off-road automotive machinery. Now, what has happened is the personal mobility space, which is the oil we sell for cars and bikes, has actually been growing much faster over the last 5 or 6 years. And today we're in a situation, while in volume terms we still sell more commercial vehicle oils, in gross margin or profit terms, today we'll be making this year in 2014 for the first time an equal profit or gross margin from personal mobility. Now, going forward, we expect that the bulk of our new growth is actually going to come from personal mobility. So we're doing a lot of work to focus on the cars and bikes oils that we sell. And we've done many innovative things. So we've launched new products, we found new customer segments. So we're really focusing on personal mobility as a key segment for us.
Okay, I'll ask you more on this personal mobility, but just a broader question.
Sure.
What can be the expected volume growth in the automotive segment as well as in the industrial segment in F5, in the second half of this fiscal year, as well as in F5-16?
So going forward is a function of two things. So firstly, we've seen a consistent volume growth in our personal mobility business. So we are sort of reasonably confident being able to grow this by 6 or 7%. I think the big question with overall volume growth is what happens to the commercial vehicle oils. And what we've seen is that that industry still looks under stress. So in recent months, we have seen some improvement in the sale of medium and heavy commercial vehicles. But I think it'll take a few quarters for this market to fully restore. And in our conversation with heads of businesses, of big OEMs, I think they share a similar view that's going to take a bit of while. So the real volume growth that you will see in the Castrol business will come through once the commercial vehicle business stabilizes. And we expect that to happen probably in the second half of the calendar year 2015. Once that happens, and through the second half of the calendar year 2015, we should expect to see a 2 to 3% volume growth for Castrol India come through.
Okay, sir, just finally to wrap it up, if you're expecting stability in the CV space by the second half of calendar 2015, by when do you expect it to actually match pace with the passenger vehicle segment?
So I think in my sort of experience and expectation, the passenger car and the personal mobility space will continue to move faster than the commercial vehicle space. I think the sheer number of vehicles we're going to see as the GDP of our country increases, as incomes goes up, aspirations to own cars and bikes are going to really increase. And in our expectation, we expect that even the market for personal mobility over the next 5 years will grow much faster than commercial vehicles.
Okay, Mr. Kirpalani, we'll leave it at that. Thanks so much for joining in.